Vietnam, Asia's next tiger economy. Vietnam is quietly executing one of the most impressive economic transformations in modern history, and the world is only beginning to notice the magnitude of what is unfolding in this Southeast Asian nation of over 100 million people. While headlines focus on India and China, Vietnam has been steadily building the foundations of an economic powerhouse that combines manufacturing excellence with technological ambition, creating a model that could reshape Asian economics for decades to come. The numbers tell a compelling story, but they only scratch the surface of a deeper transformation where government vision meets private sector dynamism, and where strategic geographic positioning meets demographic advantage in ways that few countries can replicate. Vietnam's economic performance in 2025 has shattered expectations, with GDP growth reaching 8.02% for the full year, marking the strongest performance since 2011 and outpacing every major economy in Southeast Asia. The third quarter alone saw growth of 8.23%, demonstrating acceleration rather than deceleration despite global economic uncertainties and trade tensions that have constrained many other export-dependent economies. Major financial institutions have been scrambling to revise their forecasts upward, with HSBC projecting 7.9% growth for 2025 and 6.7% for 2026, making Vietnam the fastest-growing economy in ASEAN. The International Monetary Fund forecasts 6.5% growth for 2026, while Vietnam's own government has set an audacious target of 10% or higher growth, reflecting confidence in the country's economic momentum and reform trajectory. The ambition behind Vietnam's 10% growth target for 2026 is not mere political rhetoric, but backed by concrete plans and structural advantages that are coming together at precisely the right moment in global economic history. Per capita income is projected to reach $5,400 to $5,500 in 2026, up from just over $5,000 in 2025, marking Vietnam's transition into high middle-income status and creating a domestic consumer market of significant scale. Total social investment is planned at nearly $189 billion, equivalent to approximately 33% of GDP, representing the highest public investment to GDP ratio in Asia, and demonstrating the government's commitment to building the infrastructure needed for sustained high growth. Export growth is targeted at 8%, with a trade surplus of around $28 billion, while retail sales are expected to grow 11% to 12%, reflecting robust domestic consumption alongside export strength. Foreign direct investment has become the lifeblood of Vietnam's transformation, with record-breaking inflows that underscore global confidence in the country's trajectory. In 2024, FDI disbursements reached an all-time high of $25.35 billion, reflecting a 9.4% year-over-year increase, while total registered FDI in the first 10 months of 2025 surpassed $31.52 billion, representing a 15.6% annual increase. Manufacturing alone attracted nearly $18.22 billion in the first 10 months of 2025, accounting for 60% of total FDI, and signaling a clear pivot toward high-value industries such as electronics, advanced equipment, and semiconductors. The composition of this investment reveals Vietnam's strategic positioning, with 759 new manufacturing projects registered in the first half of 2025 alone, representing a 40% year-over-year increase and demonstrating accelerating momentum in global supply chain realignment. The China Plus One strategy has become Vietnam's golden ticket as multinational corporations seek to diversify production beyond China in response to geopolitical tensions, rising labor costs, and the need for supply chain resilience. Vietnam has emerged as the primary beneficiary of this shift, offering the perfect combination of proximity to China, competitive labor costs, favorable trade agreements, and improving infrastructure that makes it an ideal alternative manufacturing hub. Major global technology giants have committed billions to Vietnam, transforming it into what many call the Silicon Valley of Southeast Asia. Samsung's presence in Vietnam illustrates the depth of integration between foreign investment and the Vietnamese economy in ways that go far beyond simple manufacturing relationships. Samsung invested $22 billion in Vietnam and employs 112,000 workers, making it both the largest foreign investor and one of the biggest employers in the country. Vietnam now accounts for approximately half of Samsung's global smartphone production, while Samsung alone comprises around 30% of Vietnam's total merchandise exports, creating a relationship of mutual dependence. Samsung has also served as a catalyst for additional FDI inflows as major suppliers in its global supply chains. Followed Samsung to Vietnam, with 63 of Samsung's 67 Tier 1 suppliers in Vietnam being foreign firms, predominantly Korean companies that established operations to serve Samsung's Vietnamese facilities. Apple's expansion into Vietnam represents perhaps the most significant validation of the country's manufacturing capabilities and signals a major shift in global electronics production. As of 2023, Vietnam hosts 35 Apple suppliers, making it the top destination for Apple production facilities in Southeast Asia and fourth globally, behind only China, Taiwan, and the United States. Apple CEO Tim Cook announced that the majority of Apple products sold in the U.S. are expected to be sourced from India and Vietnam, highlighting Vietnam's rising importance in Apple's supply chain diversification strategy. Vietnam already plays a central role in assembling AirPods, iPads, and Apple Watches, with analysts estimating that by 2025, the country accounts for 20% of global iPad and Apple Watch production, 5% of MacBook production, and an impressive 65% of AirPods production. The semiconductor sector represents Vietnam's ambition to move beyond assembly into the highest value segments of global technology manufacturing. Vietnam has attracted 174 FDI projects in semiconductors, with total investment exceeding $11 billion, positioning the country to capture 8% to 9% of the world's chip assembly, testing, and packaging capacity by 2032, up from just 1% in 2022. Intel established its first Vietnam facility in 2006 and has since invested over $1.5 billion, creating Intel's largest chip assembly and testing center worldwide that has shipped over 3.9 billion units. NVIDIA, Qualcomm, and Lam Research have all established significant operations in Vietnam, while Taiwanese giants like Foxconn and Pegatron are building electronic supply chain clusters in provinces like Bac Giang and Haiphong that create vertically integrated manufacturing ecosystems. Electronics manufacturing has become Vietnam's calling card, with the sector now accounting for over 19% of new manufacturing FDI and generating exports that have surpassed traditional sectors like garments for the first time in the country's history. Vietnam has become the second largest smartphone exporter in the world, behind only China, demonstrating how quickly the country has climbed the value chain in globally competitive industries. In the first 10 months of 2025, computers, electronics, and components led Vietnam's export performance with significant month-over-month growth, reflecting strong global demand for Vietnamese manufactured electronics. The geographic concentration of manufacturing FDI reveals strategic planning and infrastructure development that channels investment into regions with the best logistics and labor availability. Northern Vietnam has captured 54% of FDI capital and over 380 projects, with provinces like Bac Ninh, Haiphong, and Hung Yen emerging as major manufacturing hubs. Bac Ninh alone accounted for over 13% of new manufacturing FDI in the first half of 2025, with 115 projects, making it the leading destination for electronics and technology manufacturing. Southern Vietnam remains important, with Dong Nai and Ba Ria, Vung Tau provinces attracting significant investment, while Central Vietnam has doubled its share from 3% to 6%. As investors seek lower costs and government improves infrastructure in previously underutilized regions. This geographic diversification ensures that growth is spread across the country rather than concentrated in a few cities. The investor country composition of Vietnam's FDI reveals the geopolitical and economic forces. Asian manufacturing China topped the list of investors with 23.4% of all registered capital in the first half of 2025 and dominated in terms of project numbers with 406 new manufacturing projects representing 33% of the total. Singapore contributed 15.6% of capital with 178 projects, while Hong Kong accounted for 12.3% of capital with 199 projects. South Korea remains the largest cumulative investor in Vietnam with 10,329 active projects and $94 billion in total investment, accounting for 17.8% of all FDI. Taiwan, Japan, and the United States round out the major investors, each bringing different strengths, whether in electronics, automotive, or services. Notably, U.S. investment remains modest at under 5% of total FDI, suggesting significant room for growth as American companies seek China alternatives. Infrastructure development has been the unsung hero of Vietnam's economic transformation, providing the logistics backbone that makes large-scale manufacturing feasible. The government has invested heavily in expressways that connect major economic centers, with the expansion of the SIMEP-VI port cluster enhancing Vietnam's capacity to handle massive export volumes efficiently. New airports in cities beyond Hanoi and Ho Chi Minh City are opening up previously isolated regions to international business, while metro systems in major cities are reducing congestion and improving urban mobility. Energy infrastructure, including both traditional power generation and rapidly expanding renewable energy capacity, ensures that manufacturers have reliable electricity supply. Digital infrastructure is being upgraded to support everything from manufacturing automation to e-commerce, creating the connected economy that modern businesses require. The shift from land deals to ready-built factories signals Vietnam's maturation as a manufacturing destination and the increasing sophistication of investor requirements. In the first half of 2025, 54% of new manufacturing projects chose factories over land deals, reversing the pattern from previous years when most investors preferred land deals. That gave them complete control over facility design. This shift reflects growing demand for speed to market, as companies seek to establish operations quickly in response to shifting global supply chains. Electronics, light assembly, and packaging manufacturers particularly favor ready-built facilities that allow them to begin production within months rather than years. The growing factory deal market also signals opportunity for developers focused on standardized ESG-compliant and automation-ready facilities that meet the evolving needs of high-tech manufacturers. Vietnam's services sector has undergone remarkable transformation, expanding to contribute more than half of GDP and demonstrating that the country's economy is becoming more diversified and sophisticated. In the first quarter of 2025, alone services grew 6.12% year-over-year and accounted for 52.23% of GDP growth, underscoring their rising role in the national economy. The sector encompasses everything from finance and insurance to tourism, hospitality, logistics, and digital services, creating millions of jobs in urban areas. Vietnam's digital economy is expanding rapidly, with e-commerce platforms, payment systems, and fintech services reaching consumers across the country. The government projects that the digital economy will contribute 14.02% of GDP in 2025, continuing to play a crucial role in improving operational efficiency and productivity. This services growth provides balance to the manufacturing-heavy economy and creates a more resilient economic structure. The labor market dynamics in Vietnam present both opportunity and challenge as the country seeks to move up the value chain while maintaining cost competitiveness. Upgrading education and training to increase the supply of high-skilled workers is recognized as a national priority essential for sustaining FDI inflows and enabling domestic firms to benefit from productivity spillovers from foreign companies. Human capital must surpass a critical threshold before regions can fully realize the benefits of foreign investment. The political and policy environment in Vietnam provides stability and predictability that investors value highly, even as the country maintains its unique socialist market economy model. The Communist Party maintains political control while embracing market reforms and private enterprise, creating a system that combines authoritative decision-making with economic pragmatism. Recent policy reforms have focused on reducing bureaucracy, improving the ease of doing business, and providing stronger intellectual property protections that high-tech companies require. This combination of stability and reform orientation gives investors confidence that Vietnam will continue to improve its business environment rather than backsliding into protectionism or excessive regulation. Challenges remain substantial despite Vietnam's impressive economic performance, and addressing them will determine whether the country can sustain high growth and move into advanced economy status. Infrastructure gaps persist, particularly in secondary cities and rural areas where roads, ports, and utilities lag behind the needs of modern manufacturing. Income inequality between urban and rural areas, and between workers in different sectors, could create social tensions if not addressed through inclusive development policies. The property market downturn has emerged as a significant headwind for Vietnam's economy, threatening the wealth of middle-class families and constraining government. Revenues from land-related transactions, real estate, and construction have been major drivers of growth in recent years, but overbuilding combined with tighter credit conditions has led to falling prices and reduced transaction volumes. Many developers face liquidity pressures, while banks have exposure to property loans that could become problematic if the downturn deepens. The government has introduced measures to support the market, including easing restrictions on foreign property ownership and providing financing support, but recovery remains uncertain. The comparison with Thailand, Indonesia, and Malaysia reveals Vietnam's exceptional performance, but also highlights different development models and challenges across Southeast Asia. Thailand's economy has struggled with political instability and has seen much slower growth, averaging around 2% to 3% annually, while Vietnam surges ahead with growth rates 2 to 3 times higher. Indonesia, with its massive population and resource wealth, grows respectably at around 5%, but faces infrastructure challenges and regulatory complexity that Vietnam has addressed more effectively. China's relationship with Vietnam is complex, combining elements of cooperation, competition, and historical tension that shape economic interactions in important ways. China is simultaneously Vietnam's largest trading partner, its biggest source of imports, and increasingly a major investor as Chinese companies seek to relocate production to avoid tariffs and diversify supply chains. The proximity of the two countries and their shared border creates natural advantages for supply chain integration, allowing components to move quickly between Chinese suppliers and Vietnamese assemblers. The technology transfer question looms large as Vietnam seeks to move from assembly to innovation and from foreign-dominated exports to domestic technological capabilities. Foreign companies bring capital, employment, and exports, but typically retain core technologies and high-value functions, like research and development in their home countries. Vietnam wants to capture more of the value chain by developing domestic suppliers that can gradually take on more sophisticated tasks and eventually compete independently. The services and digital economy offer Vietnam a path to higher-value economic activity that complements manufacturing and creates opportunities for domestic entrepreneurship. Vietnam's digital economy has been growing rapidly, with e-commerce platforms like Shopee and Lazada achieving massive scale, while domestic players like VinFast in electric vehicles and VNG in technology services demonstrate that the creative economy, including gaming software development and digital content, is emerging as a growth area that employs highly educated young people. This diversification into services and digital sectors reduces dependence on manufacturing and creates a more balanced economy. Energy transition represents both a challenge and an opportunity for Vietnam as the country seeks to power industrial growth while meeting climate commitments and attracting environmentally conscious investors. Vietnam has ambitious renewable energy targets and has seen remarkable growth in solar and wind capacity in recent years, driven by attractive feed-in tariffs and international investment. However, the power grid struggles to integrate intermittent renewable energy, while coal plants continue to provide baseline capacity, creating tension between environmental goals and energy security. The demographic dividend that Vietnam currently enjoys will not last forever, and the country faces a race against time to achieve development. Economy status before population aging becomes a constraint. Vietnam's population of over 100 million is currently young, with the median age around 32 years providing abundant labor for manufacturing and strong domestic consumption. However, fertility rates have fallen dramatically, and the population is projected to start aging rapidly after 2030, following the pattern seen in other East Asian economies. Regional economic integration through ASEAN provides Vietnam with a larger market and a platform for greater influence, but also creates competition from neighboring countries, pursuing similar development strategies. ASEAN's combined economy of over $3 trillion and 650 million people creates opportunities for regional supply chains and intra-ASEAN trade that benefit all members. Vietnam has been an active participant in ASEAN economic integration, supporting efforts to reduce barriers and harmonize standards across member states. The geopolitical competition between the United States and China creates both opportunities and risks for Vietnam as the country seeks to maintain good relations with both powers while maximizing economic benefits. The United States has elevated Vietnam to a comprehensive strategic partnership, reflecting shared interests in balancing Chinese influence and maintaining freedom of navigation in the South China Sea. American companies are increasingly looking to Vietnam as an alternative to China for manufacturing, while technology transfers and defense cooperation are expanding. Vietnam's strategy of bamboo diplomacy emphasizes flexibility and balance, avoiding alignment with either side while extracting maximum benefit from both relationships. The future trajectory of Vietnam's economy over the next decade will determine whether the country joins the ranks of high-income nations or gets stuck in the middle-income trap that has ensnared many developing countries. Optimistic scenarios see Vietnam maintaining 6% to 7% growth through 2030, with per capita income reaching $7,000 to $8,000 and the economy surpassing $600 billion in total GDP. This would require continued success in attracting high-value manufacturing, sustained improvement in education and skills, expansion of domestic innovation capacity, and effective management of financial and environmental risks. Vietnam represents one of the most compelling economic stories in Asia today, combining rapid growth, successful industrialization, and strategic positioning that few countries can match. The country's ability to attract record FDI flows from leading global technology companies signals confidence in Vietnam's trajectory and its role in the future of global supply chains. Challenges remain substantial, and success is not guaranteed, but Vietnam has demonstrated resilience, adaptability, and ambition that suggests the country is well positioned to continue its remarkable rise. For investors, businesses, and anyone interested in the future of Asian economics, Vietnam deserves close attention as it writes the next chapter in its extraordinary development story and potentially emerges as Asia's next tiger economy.